Hey guys, what's up? PipSnipers here, back for another update. Let's take a look at Total 3 over here, going all the way back to 2021. Now, as you guys can see over here, this was just an ABC correction, a 3-wave move down in your A wave, right? A 3-wave move up in your B wave, and then we have a 5-wave move to the downside for the C wave. Then we started the impulsive move up at the beginning of 2023 when Bitcoin bottomed out and the S&P did as well. Okay, so we bottomed out here. We had a 5-wave move to the upside. Then we had a very long and grueling wave 2. Now this wave 2 took a little bit over 100 days, so about 107 days this wave 2 took, right? And it came down to around the 786 88.6% fib. You guys see how it came down to this 886 over here? Right over here. Okay, perfectly came down to the 886, and then we started our wave 3 to the upside. So now that our wave 2 is finished over here, now we're going in for your wave 3, which started in June of 2023. So this would be your wave 1. This is your wave 2. You have your 3rd wave to the upside, a quick WXY correction for your wave 4, and then we go up for your wave 5 of 3, which took us right to March of 2024. Then we had a WXY correction down for your macro wave 4, lasting a little bit over 7 months. And then we had a wave 1, and now we're starting our wave 5 to the upside. So within that wave 5, this is your wave 1, your wave 2. This is your 3rd wave. We come down for a 4th wave right here in the form of a falling wedge. And then we break out of that falling wedge. So we actually went from making lower highs and lower lows right over here. These are your lower highs. And these are your lower lows. Okay? Then we went to making higher highs and higher lows. Okay, so the trend has definitely shifted, and at the bottom of this falling wedge we actually formed a compression pattern over here, and we broke out of that compression pattern right here. Now when you break out of such a pattern, you're going to have a lot of retail traders longing the market, getting very excited, opening up high leverage futures trades, and usually the market maker knows this, right? The market maker always knows this, right? Whenever people get super excited in the market, what usually happens? Well, we have a minor correction or a minor pullback or flush before we can continue our way to the upside in a healthy manner, right? Taking a look here at the 4-hour time frame. When we take a fib from the April 27th high down to the May 6th low, we do see that we came up to the 2.618, 2.786, and 2.886 extension. Not only that, but we rejected off of the 61.8% fib when we take a fib from these highs back here in January or December down to these lows here in April. So you see how we rejected here off this 618? So it wouldn't surprise me if Total 3 comes down just a little bit more. You can see that we're just hanging on the 200-day moving average by a thread. This is the 200-day moving average right here. As you guys can see, we're currently holding above it. We're actually just below it, but we do have the top of our ascending triangle over here sitting at 842 billion. Now, whenever you have an ascending triangle, right, you break out of it, come back to tap it as support, and then you have continuation up. So we could be seeing that right now. We could be witnessing that, where we just come down to around 842 billion, 842.95 billion, tap that as support, and then continue on our way up. As you guys can see, how many times we've rejected off of this level, right? Once, twice, 3 times, but we never tapped it as support. So it wouldn't surprise me if we come down there. That would actually be right at the 38.2% fib. So if we take a fib from this April low up to this high over here in May, we can see that the 38.2% fib is right there. Okay, if we go below the 38.2% fib, then it's likely will come down to tag the 21 and 50-day moving average, which would be right over here. Okay, so this is the 21-day, and this is the 50-day right over here. Okay, the 21-day is just above the 38.2% fib, and the 50-day moving average is just below the 50% fib. So we're likely gonna come down here. I want to see how the price reacts once we get there. We either see a pop up or we continue on our way down towards the 50-day moving average and the 50% fib. See a pop up from there, lose the 50-day, then the only support we got left is the 618 and 702 at 775 and 750. Worst case scenario. And it would have to be a very big flush in the market. We would come down to the 786 at 725 for your wave 2, right? This is your wave 1, this is your wave 2, and then we pop off for your wave 3. But if we did come down to the 786 fib, we would need to have a very big flush in the market. But it's possible, so let's not rule it out. But yeah, I'm taking a look at all of these supports here. Mainly the 38.2% fib, which is previous resistance within this ascending triangle. Okay, so coming down to it, want to see how the price reacts. If we lose it, then we're going to come down to the 50% fib and 50-day moving average, and then we'll see how the price reacts from there. But so far, total 3 does look good. As you guys can see, we haven't finished our wave 5 of 5. We're currently within wave 5, very similar to that of the S&P and the NASDAQ, right? But we still need the wave 5 of 5, which will likely top out at around 1.6 to 1.74 trillion, but we're gonna have to alter those targets as the price develops, right? Because nothing in the market stays the same. Things change every day. So we're gonna have to update this analysis as the price continues to progress, but I don't always have time to update on YouTube. So definitely click the link in the description below to join the Discord so you guys can stay up to date on all of my content and you can stay up to date with this total 3 chart. But going forward, what we see over here is just us coming down to backtest this ascending triangle. You can either view it as an ascending triangle or you can view it as an inverted head and shoulders pattern, where this is your left shoulder, this is your head, your right shoulder, and now we're just coming down to backtest the neckline. And what I've noticed is sometimes we come a little bit below the neckline, so let's just give this a little bit more space or more breathing room. And then these levels over here would be all of your fib supports. Okay? Very crucial going forward that we don't go below the 702 and the 786. This, I would say, is your danger zone, your line in the sand. Okay, go below the 702 and 786, then it's very likely this is a impulsive move to the downside, and we already saw the top here in December, right? And then instead of this being a wave 1 and us coming down for a wave 2, it would instead be an A, B, C, D, and E for a wave 4. This would be a wave 1. This would be a wave 2. This is your 3rd wave. This is your 4th, right? And now we come down for a 5th. That would be the ultra bearish scenario, which would only be confirmed, like I said, if we go below this 702 and 786. But so far, I'm very optimistic. I'm bullish on the market going forward, and I'll definitely try to keep you guys updated. Hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out and take it easy. See you in the next one.